Welcome to Mrs. Moneybags Live. This episode is sponsored by QuickEquities.ca, getting you to your money fast by providing customized mortgage solutions for Canadians and clients all across the country. I am your host, Nicole Williams, aka Mrs. Moneybags, mortgage agent level 2. We go live Monday to Friday, keeping you posted on the latest financial developments, market trends, and economic news, helping our viewers make informed decisions about their money. Reminder to do your own research. This is intended for information purposes only. Let's get started. I hope everyone had a splendid and amazing weekend. I know I did, definitely. But let's get into today's mortgage industry headlines. So here is the summary of mortgage and housing news from across Canada for Monday, January the 15th, 2024. Let's get right into it. So the first article is talking about interest rates being slashed. I know everybody must be interested and excited to hear this. So big banks slash mortgage rates this week to reflect lower bond yields in Canada. So just a reminder, fixed rates are linked to the bond yield, where the variable rates are based on the Bank of Canada's overnight rate. So this is where we're going to start seeing, hopefully, some decreases in the overall interest rate. But let's get into the article. Nearly all of the country's big banks slashed their advertised fixed mortgage rates this week. In some cases, by as much as 70 basis points, which is 27%. As we reported last month, countless lenders have been dropping fixed mortgage rates to bring them in line with funding costs, following a sharp decline in bond yields, which led fixed mortgage rates pricing to come down. This week, most big banks, as well as some lenders that you know, reduced rates across all mortgage terms, including the advertised 5-year rate, with insured those with a down payment of less than 20%, averaging a rate of 5, and uninsured at around 5.65%. However, we hear that well-qualified clients at select banks are being offered high ratio as low as 4.99% if they are closing in the next 30 days. Other mortgage lenders have also been dropping rates, including some online discount online. As of Friday, some agents are offering rates on insured mortgages as low as 4.9%, although that is not available in all provinces. For those wanting a short term, the lowest high ratio 3-year fixed rate is now priced at about 4.99%. Rates have been falling steadily since October, mirroring the decline in Government of Canada's bond yields, which have fallen over a full percentage point since peaking in October. Observers say the latest rate by all of the big banks this week is simply to bring the pricing in line with the current level of the bond yields. Rate cuts are all due to the spreads being so high for so long, and they are just now coming into adjustment. However, should yields start to trend back, borrowers shouldn't rule out the possibility that rates trend higher. Variable rates are expected to fall later this year, while fixed rates could continue to fall further. At least one rate expert noted that bond yields on which fixed mortgage rates are priced are forward-looking rates and have fallen in anticipation of monetary policy. As a result, further fixed rate cuts going forward. Our current fixed mortgage rates are already priced in substantial rate cuts by the Federal Reserve and the Bank of Canada in 2020 and the Bank of Canada in 2024 to reduce
That reduces the potential for further decrease. That reduces the potential. Variable mortgage rates, which are currently variable mortgage rates, which are currently to 150 basis points above the comparable fixed rates, are expected to fix rate through the year as the Bank of Canada through the year as typically Canada delivers. And anyone choosing a variable rate today must go to that variable rate today available. And with enough time left on their the higher initial costs, the higher initial costs, some additional. That means rates would have to start falling substantially and bond markets are currently pricing in a 74% chance of rates cut at the bank's March rating cut at the bank, and a 30% chance of additional 50 basis points. That again. Let's read that. Bond markets are currently pricing 74% chance, 74% rate cut. Bank rate March at the banks, and a 30% chance of an additional 50% chance of an additional 50 basis points. By September, markets see a 600% chance of 100 basis to the current benchmark cut up by the current benchmark rate. What are your thoughts on that? What are your prediction? So that is a prediction that we will have a total of about 100 basis points, 20 worth of cuts. If you're in the market for a mortgage today, considering variable rates, considering payment risk, you can tolerate there to be payment risk. And for those not willing to take on the risk, of a variable rate, a 1 year fixed rate is as it gives you time to assess the environment. For those renewing and who may have a 3-year fixed rate, take a 3-year fixed rate, that might help give you. What are your thoughts on the predictions on the variable side, both on the variable side, as well as again the thought process is that over 200 basis points should represent 100 basis points, representing 1% the rental interest rate locked off, and we've already seen the fixed price 5-year down on the fixed 5-year term. Drop in the comments below what your thoughts are. And are you in agreement with this? Let's get into the next. Canada real estate home prices up 4.3%. Higher prices expected in 2020. So Canada real estate home prices up higher 0.3% in Q4 with higher prices expected. A new Royal LePage survey says national aggregate home prices in Canada have increased 4.3% in the fourth quarter, and that prices are expected to continue to rise. According to the Royal LePage House online survey, on Monday, the aggregated price of a home in Canada is year-over-year 4.3% to $789,000. Royal LePage calculates aggregate prices using a weighted average of the median value of all housing prices price drop on a quarterly basis. Price dropped as higher interest rates continue to dampen demand in the housing. The increase is below what Royal LePage had predicted earlier. It revised its fourth quarter guidance on softer activity in the wake of softer activity and the aggregate price of a home, predicting that the aggregate price of a home would rise 7%. Prices have not fully recovered from the post-pandemic correction. Now 7.9% below the peak of reached in the first quarter. However, home prices are well above pre-pandemic levels, up 18.7% compared to the 22.2% and 22.2% compared to 2018. Chief Executive
Royal LePage, chief executive, said, "I think the general public will be surprised to see how well the housing market has stood up during a post-pandemic. It's quite remarkable that we could have the volume of sales drop by some 20%, and yet home prices have stayed essentially flat. Typically, when demand falls off like that, prices would soften considerably." Royal LePage sees a further recovery on the horizon in 2024. The Bank of Canada expected to start cutting its key interest rates this year. The central bank aggressively hiked rates in the wake of high inflation over the last 2 years, bringing its benchmark rate to 5%, the level it has remained at for 3 consecutive years. Economists widely expect that the central bank will continue and soon begin cutting rates as the economy continues to slow and show signs of weakening. We believe it will happen this spring, with the bottom happening towards the end of the first quarter as the spring market rolls into life, and then prices will start to edge up modestly to the second quarter. When that happens, we believe there will be a sharper uptick in both volume and home prices, with prices finishing the year up 5.5% over where they were at the end of 2023. So they're predicting that 2024 will end with a 5.5% increase over 2023. What are your thoughts on that? Very interesting to know that even with all the changes in the economy and in the market, the housing market has stood very firm and actually hasn't taken much beating. Although we have seen slight corrections, we are still above the 2019 and well above the 2020 figures. What are your thoughts on that? Drop your comments below. 5 things to watch for in the Canadian business world in the coming weeks. This should be a really interesting read. So 5 things to watch for in the Canadian business world in the coming weeks. So 5 things to watch for in the Canadian business world in the coming weeks. So first is the housing figures. A pair of reports this week will offer a look at how the housing market finished in 2023. We just finished, reading an article about that. So that's something to look out for. There should be much more commentary on that. The Canadian Real Estate Association is expected to release its December home sales figures on Monday, while Canada Mortgage and Housing Corp is expected to release housing numbers for December on Tuesday. So again, we did get some of those numbers today. We'll be getting some more from the Canada Mortgage and Housing Corp as of tomorrow. Business Outlook Survey. The Bank of Canada will release its Business Outlook Survey and Canadian Survey of Consumer Expectations on Monday. So that should be dropping sometime later today. The report comes ahead of the central bank's next interest rate decision and monetary policy report expected on January 24th. Inflation. Statistics Canada is set to release its latest inflation reading for the month of December on Tuesday. The annual pace of inflation held steady in November at 3.1%. Housing Minister. The federal housing minister, Sean Fraser, will give a speech in Toronto on Wednesday to discuss ways to solve the country's housing crisis. Housing affordability has been a key issue as Canadians face inflation and rising interest rates that have driven the cost of mortgage payments higher. And other economic data. The economic picture for November will become a lot clearer this week with several reports from Statistics Canada. The agency will publish its monthly survey of manufacturing and wholesale trade figures for November on Monday, while its reading for retail trade is set for Friday. This report by the Canadian Press was first published yesterday, which was January the 14th, 2024. So very, very interesting. The 5 things to look out for is the housing figures, the Business Outlook Survey, inflation, housing minister's speech, and other economic data. All of these things should be hitting us within the next couple of weeks. Definitely keep an eye out. You know, we will be keeping an eye out because we will be discussing those and other things on this platform. Okay, so what are your questions? What are your thoughts about those particular things to watch? Do you have any questions about those? Drop them in the comments below. Let's get into the financial tip of the day. So it has been said that a lot of individuals are facing the inflationary pressures in 3 particular areas. A, in the grocery stores, B, with the cost of housing, and C, when it comes to gas prices. Although in the last couple of months, with oil prices coming down, we have seen that figure come down a bit. But with that being said, we figured that we would talk about creating a shopping list when you are going shopping. Creating shopping lists ahead of time, before you head out to the store. Let's go through that again. Creating a shopping list will help you to stick to a budget. First off, it ensures that you save money because you stick to the items that are necessary and you don't go off tangent by buying food that you may waste. It is estimated that a lot of people waste food and food ends up in a lot of garbage and landfills. So if we can create a shopping list of all the items that are needed and necessary before we go grocery shopping, this should help alleviate some of our financial concerns. Okay. Today's Mrs. Moneybags money affirmation is, I am open to receiving wealth from expected and unexpected sources. I am open to receiving wealth from expected and unexpected sources. Let's say that together 3 times. I am open to receiving wealth from expected and unexpected sources. I am open to receiving wealth from expected and unexpected resources. I am open to receiving wealth from expected and unexpected resources. Let's say that again another 3 times. I am open to receiving wealth from expected and unexpected resources. I am open to receiving wealth from expected and unexpected resources. I am open to receiving wealth from expected and unexpected resources. That's all the time we have for today. Thank you for watching Mrs. Moneybags Live. We'll see you again tomorrow.